Welcome to ZIA TV. This week, we are pleased to have Chad Meyer and Simon Clark from HedgeACT as our guests. Gentlemen, welcome to the program.
Thank you, Tony.
Thank you.
Chad, let's start with you about the stock market that we see seemingly making records every time you turn the news on, right? What's your take on this? What's going on?
Well, it's kind of amazing. I mean, the bull market is getting a little long in the tooth, to say the least. You know, it really started taking off with Trump's election, and a lot of people thought that that would be fairly short-lived, and obviously has not been short-lived.
Right.
It's just continued and even accelerated. It's really hard to say what's driving the market. I mean, a lot of people at this point think that it's the potential tax reform. Think that you know, corporate profits are good. Think that those are going to continue and even increase. But you know, I wouldn't be putting a lot of money to work in this market at this height right now. I would really be positioning the portfolio in more of a defensive manner, because eventually it is going to stop, and it could potentially crash fairly hard. So at this point, I'd be kind of positioning my portfolio to be ready for that.
Do you feel we're at the point yet where the widows and orphans now want in? That's
probably the problem. When you do get to that point, it's time to beware.
So we might be making a top, is what you're saying?
I think so.
Of course, we said that 2,000 points.
A lot of people have, yeah.
Right.
I think the only thing I'd add to that too is, if you look at the financials, the financials are all very strong. Your B of A is up at 27 bucks, etc. And when you have a stock market, particularly the large caps that are being driven by the financials and underpinned by such, then it does give it at least a little bit more credibility and strength.
Sure.
But where do we go from here? It's, you know, anybody's guess, unfortunately.
Let's talk then a little bit about diversification. We've always heard all these years, right? Important to have a diversified portfolio, non-correlated to the broad market. So in this environment, what does that mean?
Well, here's the challenge. We've been in the hedge fund business for many years now, and people typically associate hedge funds with long-short strategies. Well, guess what? Those are market correlated.
Right.
And many of the alternative investments are de facto invested within the capital markets. So what we do, as do others, we look for completely non-correlated assets, so strategies that are definitively not correlated to the markets, and most importantly, in a fund-of-fund structure, for example, not correlated to each other, so you're not doubling down on your exposures.
Interesting.
And obviously, you want to be correlated when the market's going up.
Sure.
You want to try to not be correlated when it's going down. So, it's you know, I think now's the time to really start looking at non-correlated assets. You've taken the ride up. You know, kind of diversify yourself away from the market at this point, and be ready for what happens. Maybe not next week or next month, but
Eventually.
Eventually, yeah.
All right. Well, let's talk a little bit about Brexit and the unrest in some other countries. And there's a multi-question here. So I'm going to break this apart a little bit. How is Brexit and the unrest in other countries going to be impacting U.S. investors here?
Sure. Well, perhaps seeing as I'm a Brexit person, I'll set the tone. First off, I think the majority of Brits didn't expect Brexit to pass, and I happened to be there when it was voted upon and woke up to the sort of resounding news that it had been passed. And I think there's still, a year and change later, some resulting shockwaves from it. Compounding Brexit, and let's not forget that Britain contributes between 17 and 20 billion in revenues to Europe every year. You've now got issues within other countries. So in Germany, you've got the rise of the far right, which is somewhat undermining Merkel's power. You've got Austria, which has just had a far right election. So those are the political issues. And then you've got macro issues in Spain, for example, where you've got a significant problem with the folks in Catalonia. So how will that affect us? Well, it will affect us because the currency is strong. It will stay strong as long as QE, quantitative easing, persists in Europe. There is an artificial elevation of the euro, and so our stock market – will continue to look very attractive because there is this unrest. But it will also continue to look very attractive because there is this unrest.
'Cause there is this unrest.
'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this unrest. 'Cause there is this Are they going to be hot dollars? It's hard to say. Certainly in the fixed income, there is a lot of assets pouring into the US, which is, again, artificially inflating the markets.
Are these all sources of volatility for the market?
I don't know, what do you think?
Potentially. I think what you'll see happening is over the next year or so, whether or not Brexit will happen, and there's a significant potential that it might not follow through. It will have reverse volatility for US markets if there is, for example, a civil war in Spain, which we know they've done before, and you've got 450,000 people surrounding the Parliament building.
Sure.
Yeah.
So aside from what you've mentioned, are there other sources of volatility that are maybe more imminent?
Well, I mean, I think inflation is always a concern. I think the political situation in the U.S. is certainly a concern. I mean, you never know what the next tweet might bring. You know, the search for a new head of the Federal Reserve is certainly.
I was going to say, yeah, that's
up
got to
in the
be
air, yeah.
near the top of the
So
list.
you just never know what Trump is going to do, quite frankly. And surprisingly, to this point, it hasn't kept the markets down. But I think that could really change in a heartbeat.
What about hedge funds in particular? Hedge fund managers look for a safe harbor, correct? Is that ironic that hedge funds now look like a safe harbor is what I should say?
Well, I think hedge funds have gotten a bad rap for not providing the safe harbor that they say they do. The 85% of all hedge funds are long-short hedge funds, long-short the market. And what that has ended up meaning is that as the market's gone up, the hedge funds haven't gone up as much as the market, and in down markets it hasn't protected as much as they profess that they would. And so hedge funds have gotten a bad rap. But again, that's 85% of the hedge fund market. Another 15% are unique strategies that really are not correlated to the market, and I think that's where your safe harbor really is in those strategies that are diversified away from the capital markets.
Interesting. Your firm has a mergers and acquisition fund. Tell us about that strategy and any trends of companies that seem to be picking up.
So we met this manager about a year or so ago, and he has focused uniquely on the merger arbitrage environment for the last 6 years. And he professes, and has done particularly well in this last five years or so, where there has been a constant flow of merger. And he takes our positions on both sides of the transaction. Now, the challenge has been that since Trump was elected, there has been a scale back in activity, largely because people have been sitting on their thumbs, waiting for tax reform, believing that that would be one of the primary objectives of the administration. Well, we're not much further along with that. So now what you're starting to see is a return to the norm. So the activity is beginning to pick up. And you can pick any number of names, but for example, there is conversation that Apple is looking to buy companies such as Disney, potentially Tesla. There's going to be activity in the biotech area, telecommunications. T-Mobile is yet again in play. So I think people are saying, okay, fine, maybe tax reform does happen, maybe it won't, particularly given what's happening in the Republican Party. So we're going to go ahead with the business imperative. And many of these mergers were sort of put on hold during the Obama administration, which was, I wouldn't say anti-big business, but didn't encourage it. And the best example we've seen this summer is Whole Foods and Amazon. More distribution for Amazon.
Sure. What about for investors who want to try to take some of the risk out of alternative investment strategies? What are ways they can do that?
Well, I mean, I think the premise of the question is that hedge funds are inherently risky, and I really don't believe that that's true. I think as we talked about, the long-short funds maybe haven't performed as well. But I don't, as the marketers, as they profess, but I don't think that they're inherently risky. And I think as you move into funds that are not correlated to the market, you can find some strategies that are frankly much more consistent and even safer, more predictable. than funds and even mutual funds that are buying the stock market. So I think you have to do your due diligence. You have to look at the fund. You have to learn what it's all about. Learn the managers. You have to look at their service providers. But if you really do your due diligence, you can find funds that are frankly true safe harbors in this market.
Well, thank you both for being here. It's been a pleasure speaking with you. Wish we had more time.
Yeah.
And thank you for joining us right here on ZIA TV. Don't forget, for more information, you can always visit HedgeACT.com.